Welcome to Trading Nation. I'm Brian Sullivan, joined today by John Stoltzfus. He is Chief Investment Strategist at Oppenheimer Asset Management, and he remains positive on equities. John, although you are not ready to reveal your S&P price target for next year, I've already revealed that you are optimistic. Can I ask you how optimistic you might be?
Well, let's put it this way. We think stocks have a good chance of moving higher next year as fundamentals are likely to continue to improve, even without any dramatic stimulus from those agenda items that the administration has. We think that 2 to 2.5%, perhaps a tad better, should be good for revenues and good for earnings for the S&P 500. And we expect that interest rates, while the Fed will be normalizing, it will be doing so at a modest pace because inflation remains fairly in control.
Yeah, so I guess the question everybody seems to be asking right now, given what's happening in D.C., John, is just how much tax reform is or is not already priced into the market. We've asked a lot of people about it. Some people have said it's 0%. Some people have said it's 25%. What do you think? If we don't get it, does it mean the market will fall?
No, you know, I think if anything, I think if tax, the more that is being revealed about the complexity of this tax proposal, whether it's the House of Representatives or the Senate, it all looks like there are several issues that definitely pick out winners and losers, and the losers are very surprised about it. I don't think it's going to happen. I think the chances of tax reform happening, at least from here to the end of the year, based on what we see currently, are very slim. But I don't think the market has been thinking that it's going to happen. I do think it's expected that we'll likely get some kind of a tax cut, perhaps a tax holiday for corporations, but that likely to be announced in the first quarter of next year in an interim, or rather a midterm election year. You're going to want to see both politicians from both sides of the aisle are going to want to give something to their constituencies. Tax cut, okay, but tax reform much too dramatic, considering all the different constituencies that are involved here and all the special interests. Just don't think it's going to happen. And I think worst effect, probably some trim in the recent sprightliness of the small caps that we've seen. That could be given up because it's been the small caps have been those that have the most focus in terms of the market thinking that they'll benefit from a tax reform.
So, John, for us, finish this sentence. Next year, the biggest risk to the equity rally is blank.
I would have to say the biggest risk to the equity rally would likely be a misinterpretation of some occurrence or an overemphasis on some kind of a catalyst that would give reason for stocks to sell off some. My biggest concern is the type of miscalculation we saw by some elements in the market in the first 7 weeks of 2016, which brought about a rather nasty decline. I think that's always a possibility, especially since we have a lot of people who have never seen a bond market that can get nasty. Except for 2013, you know, when you think about it, rates went from 1.69% in May of that year to 3.02 by the end of the year, and the stock market moved up around 29% that year. Go figure. So I don't know. You know, it's anything can happen. It could be a black swan event. It could be some kind of dislocation that occurs. But we can't help but think this just might be a continuation of a sweet spot for equities that we have seen running for years now since the financial crisis.
Fair enough. I'm excited for next year already. We got December to get through, but I'm excited. Should be another interesting year. John Stoltzfus, when you release your target, let us know. We'll have you back on. John Stoltzfus of Oppenheimer, thank you very much. And folks, as always, thank you for watching Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.